name is Dennis, and I'm the CEO of a fintech startup in Kenya called Quoxient. And in the course of operations, we have a payment gateway. And when we are operating this payment gateway, we are supporting micro-lenders. We find out that more than 80% of people requesting these microloans don't have a credit record. And this is where it gets tricky. Yeah? You need a credit record to get the credit. But then you need credit to build that credit record. However, you find that in a country where 77% are formally unbanked, we still have a thriving economy riding on mobile money. We process 15 million transactions a day, $150 million in value, meaning there's so much data sitting with the telcos that run the mobile money operations. So what we are doing is we are going to the telcos to buy this data, using this data to predict behavior. Once you predict your behavior, we assign you a limit, and then you can borrow from us. When you borrow from us, over time, and you repay, borrow, repeat cycle, we are able to create a credit score. And then we can forward this now to the bigger lenders who will give you significant credit. We will be the Moody's of credit rating in Kenya. So when you look at the alternative data market, you find that there are those who are already solving this problem. However, they are looking at smartphone users only. They are extracting data from the smartphone users, locking out those basic phones. Now, when we access the data from the MNOs directly, we are able to access more than 26 million customers out of a possible 38. And so this makes our market quite huge. Our customers on the B2C side are the customers, those who are borrowing the loans. And on the B2B side are the financial institutions, the lenders, microfinance, savings cooperatives. And how we make money is we make money from interest on loans and from the credit request fees. So far, we have already signed a contract with the largest telco. We have a license to serve content over USSD usable on the basic phones. And we've already registered interest from 2 financial institutions. The team has lots of experience in finance, technology, and financial services. And looking at the market, the credit scoring market, we are estimating $60 million by 2020. Kenya right now, the demand for fintech lending is at $2.5 billion. And we need seed money, $150,000, and we are looking to get now lending capital, $850,000.
Okay, who goes first?
Oh,
you want this?
no,
Sure.
No, have it.
So with Branch,
Yes.
I understand that they give out small amounts of money, and the way they test is if they pay back that amount, then they'll loan more. And that's the way they're doing it. And 60% or something of the first loans don't get paid back. But then in Indonesia, it's like only 2% default. And the way they do it is they say you've got to get a voucher, you got to get somebody to vouch for you. And that makes a big difference. Do you think your data is more valuable than a vouch? Or do you think, do you think somebody's going to be more effective getting their money back because they've got friends vouching for them?
Okay. Well, when friends vouch for you, of course, there is some form of credibility. But you also have to consider the friend's credibility. Now, when you look at Branch and the data they get, they're extracting it from your phone. Us, we are extracting it from the telco. And this is the same model M-Shwari is using, and 3% of the loans don't get paid for M-Shwari.
Sorry, you're getting your data from the telco?
Yeah, from a telco.
Then
However,
you're at their mercy.
Yes?
You're at the mercy of the telco.
Well, yes, indeed, and we have contingency measures on that because we intend to now get data from the lenders. We have hundreds, if not thousands, of lenders who don't have data to validate. So they usually request that you come in with your land ownership documents, vehicle ownership documents. That locks out the common man who does not have land or vehicles. So yeah, we can still get data from these other people, and we've already developed a web portal which they can put in their data.
Did someone else want to jump in?
Yeah, kind of the same question. Because I'm also worried that about the payback
Okay.
here. Like, are there studies, or have you shown already that someone, with the credit score in which you are creating, is going to pay back their loan? I guess if not, are there other data sources in which you would own explicitly that you could layer on top of mobile usage data?
So yes, there are reports from the largest bank in terms of micro lending, M-Shwari, and looking at their data, they have 97% repayment rates. And they use the same data we are going to use. However, they are not in the credit score market. We are in the credit score market. We are not considering ourselves as fintech lenders, but we'll have to advance the loans to build the credit history. Then we can advance we can sell the credit history. That's the difference.
Iman?
Is the telco data approach scalable? Like, have you spoken to other telcos in other markets about potentially getting this data as well?
So what is happening is the telco requires you to get a consent from the customer. So that one is done through the SMS service. Yes, so we are required to get SMS so they can sell it. But the customer has to consent before they
But in other markets, like as you expand this into other countries, other regions?
Expanding into other regions. It will have, with fintech, you are facing lots of regulations country by country. So we have to face each country as it comes.
Thank you, sir.